Jerome Powell has just done a speech in Chicago talking about the current economic conditions and the future monetary policy outlook. In my opinion, there are a couple of things that you need to know, especially if you're watching the market. Curious on what they are? Let's talk about it. Hey guys, welcome back to Republic Labs YouTube channel. In this video, we will talk about Jerome Powell's speech and how it might impact the market. As you can see here, Jerome Powell has designed a speech talking about the current economic condition for the United States and also predicting the monetary policy outlook for the next couple of months. The speech was announced through the official site of the Fed and its Twitter account. Yes, that's right, the Fed has a Twitter account. If you haven't noticed yet, the account handle is Federal Reserve, and you can follow them to get more updates on the monetary policy of the US. As you can see here, if you haven't watched it live yet, you can watch the recap on YouTube. Also, you can read the speech on the Fed's official site. As you can see here, the speech happened on April 16, 2025, and the text available on the official site is not a summary, but this is the overall speech that Jerome Powell did. The speech was divided into two sections. The first one was talking about the economic conditions of the United States, and the second one about the monetary policy outlook for the United States. When talking about economic data, Jerome Powell mentioned a couple of things. The first one is the US GDP. Jerome Powell mentioned that the US GDP is growing steadily. However, the first quarter of 2025 did not look great. As you can see here, according to data from Citting Economics, the current trend of the US GDP annual growth rate has been going down. This is not a good sign for the economy, especially for the buying power of the US citizens. Considering that the US has the highest volume in the market, a low buying power equates to less volume in the financial market. Also, Jerome Powell talked about the US non-farm payrolls, which is the data explaining the payrolls condition in the US non-farming sector, or it represents the data of the workforce payroll. As you can see here, the non-farm payrolls has been increasing, especially in March 2025. This is a good sign for the labor market, as this shows recovery for job openings. Jerome Powell highlighted that this US non-farm payrolls data is a good sign for the US economy. However, he mentions that there are some worries. This is because the growing unemployment rate is going faster than the inflation rate. Talking about inflation rate, Jerome Powell also mentioned the PCE data. The PCE data is a representation of the inflation data, but from the consumer's perspective. As you can see here, in 2025, the trend has not been going well, as the PCE is still increasing, meaning a lot of prices for consumers are still rising. Circling back that the buying power of the US citizens is still low. However, since the US uses core inflation to determine the US interest rate, we need to also take a look at the US core inflation data. As you can see here, the core inflation data has been going down since January 2025, currently standing at 2.8%. While this is good, it's still above the target of 2%. This means that Jerome Powell is not confident yet, especially to go into dovish mode. However, this decreasing rate of core inflation might trigger a rate cut, as this can be used for support for the decision. However, from his speech today, he mentioned that his worries are still on the tariffs. He is worried that the tariff policy from Donald Trump will cause inflation to go higher. This will put the Fed in a difficult spot, especially if it wants to turn dovish. So for now, according to Jerome Powell's speech, there's no signs of the Fed being dovish yet, and there is no sign of a rate cut. This might mean that the market might not go up yet, especially considering that currently there are no positive sentiment to boost the market. Looking at on-chain transactions as well, currently institutional whales are not buying it, as the last 7 days net inflow for Bitcoin ETF is still negative. This means that in the last 7 days, there are more selling pressure compared to buying volume. So overall, after this speech, the market might be disappointed as there are no magical news or sentiment that might make Bitcoin go up. However, the good news is that Bitcoin is currently trending above its current downtrend, with the current support of 82,200, which might keep it from being bearish. If the support holds, this means that Bitcoin is displaying a breakout retest movement. As you can see here, the breakout happened last week, and the retest is currently happening. If the support zone is kept, then Bitcoin might go up again. The current target is around $98,000 per Bitcoin. But overall, this is still uncertain, especially considering there are no positive news to boost the market sentiment. So what you can do now is just manage your risk better and stick to your trading or investment plan. Well, that's all the information I have today. If you guys have any comments, let me know in the comment section below. And if you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!